Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the Market Site and Times Square, we have Bob Hebron. He's a partner over at Practus. Bob, it's great to have you with us at the Market Site. And we're going to talk a little about some of the challenges that life insurers face today. What are they in today's environment?
Well, the single biggest challenge, when you think about it, is the challenge to earnings that they've had, and that the interest rates over the last 10 years they've been able to earn on their bonds, which is the majority of their assets, are probably less than what they guaranteed their policy owners and what they had a credit on their policy. So they've been under huge amounts of earnings pressure. At the same time, in terms of the top line numbers, their distribution systems have been aging rapidly, and their most productive distributors are tending towards retirement and are not being replaced at the same rate by younger ones. So they're under pressure there. And now, most recently, they're really being hit on both fronts by a regulatory scheme that is really targeting the sales process and their distributors and some of the complexity around their products.
So, and this is the DOL Fiduciary Rule and New York Regulation 187. That's what's really impacting.
Right. For the first time in ever, really, with life insurance, there is now a de facto best practices rule that governs how the life insurance policy is sold. And that puts a lot of burden on the life insurer in that they're responsible ultimately, as well as their distributor, for compliance with that regulation and all the record keeping and other work that has to be done in association with it.
Which of those regulatory initiatives has the most impact to potentially affect life
Well,
insurance?
the industry was pretty successful in fighting off the most onerous parts of the DOL regulation that ultimately went into effect. And that DOL regulation has limited impact on life insurance itself. It has more of an impact on retirement products and annuities. Reg 187, on the other hand, is a broadside directly to the fundamental basis of how life insurance is sold in the state of New York, which is, a disproportionately large impact on the overall U.S. life insurance sales, given the amount of policies sold in the state. All right,
so what can life insurers do to counteract these challenges?
Well, I think the biggest thing they have to recognize is this probably it promotes knowing your consumer in a way that life insurers typically haven't done over the years. They tended to rely on their distributors for information about who buys their policies as opposed to doing direct market work with the ultimate consumer. Now they really have no choice but to understand what motivates the ultimate consumer to buy and what makes that a suitable purchase. And then I think there's a challenge there in order to comply. Product innovation and differentiation is going to become more and more important, because if you can tie suitability to something special you're doing with your product, it becomes a lot easier to justify the sale on a suitability standard. Whereas if you don't have something distinctive about your policy, you could at the end of the day be viewed as a commodity, and suitability is determined by price.
All right, thank you so much for joining us at Market Site. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.